Hey, good afternoon, everyone. It's Saturday, February 9th, 2025, at about 2 p.m. Getting ready for the Super Bowl here pretty quick. This is Coach Chris from AccuTrader.net. I was just sitting down and I was going to do my quick top down analysis for the week, and I figured, well, why not record it in case anybody wants to see what my opinion on the market for the upcoming week is, and also to help those of you who are learning technical analysis to see how this is done. And so, what we mean by top down analysis is we're going to start out at larger time frames and work our way shorter and shorter with the intention of trying to find some interesting areas on the chart and start to get a little idea from a technical standpoint what type of price action, where we might be headed this week, and what to look out for and what possibly to expect. So, what we're looking to do is we're looking at interesting areas. We're obviously looking at highs and lows to see. Remember, price tends to revisit certain areas, and when it hits these new high or new low levels, it will react in one way or another. A lot of times you can see here's an area I had marked. These were high levels that have been set. By the way, I'm starting out with the daily chart here. This is the daily chart of the NQ futures market with the March 2025 expiration. And so you can see here on the screen, we're going back to around November of 2024 on this screen right here. Alexa, off. Sorry about that, guys. She interrupted my video. And so we're just kind of looking here how this market has moved. You can see here at the end of November, we had this huge push up. And then about the middle of December, we had a pull down. And you can see, I often talk about the market going in waves. So we had a wave up, pull back, wave up, pull back, wave up, pullback, larger wave up, larger pullback, and now not as distinct, but then we're having a little bit of a rise here as well. And you'll notice the market often travels in what we call measured moves. And by that, what we mean by the measured move is that when it moves, it will repeat fairly closely. Nothing is going to be exact, but fairly closely this movement. So if you look at the distance it moves down, right, and then retreats, you'll notice that this next distance that it does the same, that it retreats and pulls back, it's a very similar size. And then it will do it one more time, about the same amount down, but you can see now it's actually risen a little higher, and that's just something to watch out for. So this is the daily, and so what I've done here is I've snapped the high, which coincidentally corresponds. Nope. If we look to the left, no activity in that range. Okay, and then you can see here this level that I've marked that we hit back in towards the end of January was also touched back on the day after Christmas of last year, and it was touched also on the 11th of December. So this is what I'm talking about. Price reaches that area. It rejected. Here it broke through, pulled below, but look what happened when it came back up. It hit that interesting level, rejected, and it did that again on the 22nd of January of this year. So as we approach that level, we're going to be wanting to watch this level here to see what price is going to do. Is it going to retest it again and reject, or is it going to retest it and then finally break through and have this market move higher? We don't know that, but we're definitely going to watch what happens when it gets that level, and that level is right around the 22,100. So now that we've looked at the daily, let's go down and look at the 4-hour chart. So when we look at the 4-hour chart now, we can get a little bit more granular with this, okay? And what we're going to be looking at here is from a period about mid-January to last Friday, which was the 7th. Now, you can see these little gaps here. This is when the market closes at 3 p.m. Central Time and reopens the next evening. You can see sometimes there's a little gap either up or down. And then here again, it happened on Friday, the 31st of January. You can see that distinctive gap down. But what I want you to look at is there's a theory in technical analysis is that gaps almost always get filled. So look what happened. We had this gap, and look what happened right here. It went up to that level of where that gap was. It wicked through and then rejected down. Now look what happens here. We have this gap down. It quickly got filled here to that level, rejected, and then it revisited this gap area here and rejected down again. So we're just looking here. Is this an interesting level? Sort of. Let's move some of this in. So I'm going to mark this level down here because this is our most recent swing low. What we mean is the lowest point the lowest point we've seen in the most recent time, and this occurred on Monday, January 13th. So it occurred this year. I'm just going to snap a level right here. I'm not going to mark the wicks because I want to show you something. Okay? Look what happened here back on the 27th. It came within just a few points. Here again, it retested. Here it didn't get quite down. So just like we're going to be watching these levels up here, we're also going to be watching this level down here if price were to come down. So now we've got our upper and lower boundaries. Let's take a look at some things in the middle here and see if there's any areas in this middle area that we maybe want to watch out for. Notice how this, okay, I'm seeing an area right now, and I'm not sure if you see it or not. Let me just go this way a little bit further. So look what happened in right here. Price came up to this level, rejected, came up, and it consolidated in here, went up, and look what happened here. It pulled back through it. Didn't have enough energy to continue down, went back up, and continued to test that area until it made, and here's an M pattern here. I don't know if you can see that there, classic M pattern. I just put out a video on that, and I didn't realize that was there so distinctly. So then we get to here, and look what happened here. Went back up and tested it here. Here again, tested it, broke through, came back down, and then look at here. It came right to that level, tested it again, broke through, and now we're right back at that level. So we definitely want to watch that area. Now, remember, when I snap these lines, everybody thinks, well, we got to watch that exact level. Well, we don't watch that exact level. Instead, what we want to think about is that level is actually, I don't know what I did here. Okay. This is actually, plus or minus area. So what we're saying is, that level seems to be the actual area it reacts at, but in reality, we're going to want to watch as it approaches there, what's going to happen. Is it going to reject, or is it going to continue upward? But not necessarily that specific line, okay? So that's the 4 hour. Let me just take a quick look and see if this is kind of an interesting area down here. We just mark that. I don't know. Just see here. That's 20,984. You can see when price gets down there, it tends to jump. So it did it once here, once here. Here it broke through a little bit, went above, came back down, retested, went up. Here again, we went down, but here again, we touched it and rejected. So that's another level we definitely want to be looking at. So a couple of areas, but you can see how this is working. So we come down, reject off of some level, push back up, come down, didn't quite get a little higher low here, and then we push back up to that same level, and now we're starting to push down. So remember, this is technical analysis. We're just thinking of different scenarios at this point. But based on what I've been seeing here of these increases, pullbacks, I'm thinking that we probably are going to pull back a little bit more, either to this area here, somewhere at least halfway as far as these two lines are concerned. I would think we're going to probably and possibly even down to here before then we turn back up. But just based on what I'm seeing here and what has happened in the past, that's just what I'm thinking. I'm just going to show you this M pattern real quick. So we had a push up. Oh, that color's got to change. Wait, okay. So let me just actually fix this. An M pattern is when the market moves in such a way it details an M. So there's that leg. This leg here. And then we've got one more leg up. Okay. Can you see how that's forming an M? And what the trade is, get a trend line. This is the bottom of the M. Okay. Once price hits that bottom of that V, it's likely to continue downward to at least the base of where the M was formed, which in this case was right here. And watch what happens, in fact. It goes all the way down to here. That is 1,000 points. Okay, now obviously we can't hold overnight. And that was in the matter of, so it started the 23rd of January up until, wait, I'm sorry, Thursday. Thursday, the 23rd of January to Monday, the 27th was a 3-day, because this is a 4-hour chart. But you see how that M pattern there showed? I'm just going to get rid of those. Sorry about the distraction, but I just wanted to point that out. It's a very, very reliable pattern that you'll see develop over and over on all time frames, and it's extremely accurate. Okay, you don't know how far it's going to go down, but you are going to get some movement. So now that we've done that, I'm going to leave that on the chart. Let's go down to the 1 hour. That's our next time frame down to analyze. Okay, and you can see we're just going to get more and more granular as we. Here is that gap that we were talking about. Now we can see in a little bit more detail how this price action respected those different levels. And let's just see once here. See in an area possibly here. Respected it, wicked into it. Yep, respected it. So I'm just going to put another potential area right here. You can think of them as supply and resistance. I don't necessarily like to think of that. I call them more of an area of interest. It has either been support and or resistance at many times before. So the market will react because there's orders around these areas, and that's what happens. They either they use it for energy to either retreat and return back in the direction they came, or they use it to propel them in the direction they want to go. Remember, price is always seeking liquidity, meaning that we have an efficient market. Buyers and sellers want to conduct business. That is the sole purpose of these markets. Okay, people have money and they want to buy more. People have some and they want to sell what they buy low, want to sell high. and there's liquidity. These are people out there that are always looking to buy, either to hedge their portfolio, to add to their portfolio, or to sell and reduce their portfolio. And it's an auction, so they're looking to match what they're willing to pay with someone who is willing to spend to sell at that level. So it's always going up and down, sideways, seeking liquidity. So this is a potential area here. I am going to mark it because it looks like it is being respected. Okay, this is the 1 hour chart, remember, and this possibly, I don't like all this consolidation right there. Now, as we go lower and lower in time frame, the accuracy becomes less and less. I don't know if that makes sense to you, but when we're trading on a 1 minute, we can't use that to predict future price movement very far in advance. It's just reacting, almost like a ping pong ball or a pinball machine, just bouncing around, trying to fill these small areas. Where here we're seeing where potential big movements are forming and are going to continue. But we want to look at, because by knowing what the overall grand roadmap is, we can then narrow it down to see what the lower time frame is. So I'm getting a little long. I'm just going to do two more. I'm going to do the 15 and the 5 minute now. I've been trading a lot on the 5 minute. I really enjoy it. Yeah, you can see how these levels I've already marked out. Can you see how price is respecting them? Here we went up. But I want to point out something else. So see how price is really reflecting these levels I have marked out, which I'll tell you what really helps. So let's say I'm just going to move this over and to see if this would make sense here. Let me see what area. Okay. Let's say you get into a trade right now, right at this level here. I know it's covered up. So, and you know the market is coming down, and you know it's come down to that level previously, right? Let me just get a trade tool up here and see if I can this one I think is what I want. Short. I want a short position. Okay. So we're right at this level, and I want to do a short, okay? And so what I would do is I would put my risk right at that level, meaning that if price backed up and went above that level, I want to get stopped out, and then I would put my target right at this level, which is 70 points. And I've got a stop at 70 points. I've got a 1-to-1 risk to reward ratio. We'll put it right there. So it's a 1-to-1. We know that the likelihood of price retreating past that is very small. But we know that to the downside, the price is very likely to continue down. And so watch what happens. We enter the trade short, there, and boom, our target is hit right there. So you see what I'm saying? You can use these to have a lot more confidence in your trades. You know, it's the same thing here. Okay, so we come down, we hit that line. Now what's going on here? Long position. So we're right here, okay? Price is reversing. We're going to put a very small stop right below that line with a take profit of this upper line, which at this point is, come on, 240 points. And look what happens. Of course, it goes right back up to that area where it went to earlier here, okay? So, like I said, it gives you a lot more confidence in your trade. You know the risk to the downside is small, but the risk to, or the reward to the upside is great, okay? And this is a 15-minute chart. And you can see here how it's respecting these levels. Now, it looks like there may be a possible level up there. Oh, geez, I don't know. I'm not going to mark it because it's hard to say, okay? But like here, chances are pretty good we're going to get at least half. If it breaks through that level, I would enter here a short with the intent of getting at least here and more likely there, and then put the stop loss right at that line. So you're getting a very high reward to risk ratio. Okay, let me just go down to the 5 real quick, see if there's any further insight we get out of here. Those are all marked. You can see how they're respecting these levels. We may want to come back here. It's just so much consolidation, and we don't want to trade stuff like this. Stay away from that stuff like that. You're just going to get chopped up. But these are some nice levels that we have here. And you can see now we're back to the 4th of February. You know, they've been respecting these for weeks, okay? And the likelihood is, unless something major were happening, they're likely to respect them in the future. Now, if they do start to show a new pattern, well, then, of course, we mark that off as well, and that becomes our new area of interest. Okay, let me just, you can see here, you know, how they just are respecting these levels very greatly. And so you always want to start at the higher time frames, find where these levels are, where the price has respected and or interacted before. And if it's an area where they either use it as support from the bottom, or resistance from the bottom, support from the top, you're going to want to save it. So I hope that's helpful. This is Coach Chris out. Enjoy the Super Bowl, and I will talk to you soon.